Good morning and welcome to the SHANTA Gold Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged to be submitted at any time via the Q&A tab situated in the top right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand over to Eric Zirin, CEO from SHANTA Gold. Good morning.
Good morning, Zach. Thanks for having me on the program this morning. Good morning to our listeners in the UK and abroad, wherever you might be. Today's presentation is about the Q1 2022 production and operations report that we published this morning. I'll do as I've done in the past. I'll take you through a few slides that are on our website, give you my perspectives on the quarter, what to look forward to for the next few quarters, and then we'll open up to any questions. I'll aim to answer every single question I'm provided, as I've done consistently in the past, and then wrap it up from there. Hopefully we can do this in the next 30 minutes. And as I've said before, as I've done before, I'll turn off my video for you to focus undistracted on the slides as we go through them. But suffice to say, it's been a very good start for the year for SHANTA, and that's largely thanks to the fact that we're now into crown pillar mining at Bohemia Creek. So on April 19th, we started mining from the very high grade zone at the BC underground, which is basically the bottom of the open pit. To remind you, that's 8-gram material, and that really de-risks the 2022 plan and gives us confidence in the 68 to 76,000 ounces of gold production for the year. Over at Singita, we've continued on construction, planning and execution. We're now at 51% complete for the project. The project's on budget and on schedule, and we're clearly on our pathway to starting production there in Q1 23. And so that really will set the new benchmark for SHANTA, getting over 110,000 ounces of gold production in a year, starting next year. And then over at West Kenya, you might recall we've announced an updated mineral resource estimate, and the takeaway there is eye-watering grades and a really healthy conversion to indicated. So we've announced an increase in resources to 1.6 million ounces. But most importantly here, I think anyway, which is I think the value, is that the ounces in indicated. This is the ounces that we would hope to obviously mine at some point. 378,000 ounces at 11.7 grams per ton. So very, very healthy and very encouraging. But let's go through the presentation. We'll have a chat about what we've done and take you through it. I'll be very brief on this one because I think many of you know it, but just to remind you, SHANTA has a diversified portfolio of assets in East Africa, 2 in Tanzania, 1 in Kenya. It's a fantastic place from a gold mineral endowment perspective. There's been mining here for well over 100 years, but large scale mining for the last 40. And when you add it all up, we believe our assets are collectively worth over $500 million of NPV, net present value. We've been mining in Tanzania for 10 years. We've been in Tanzania for 20, and we know this area incredibly well. I've been coming and going to Tanzania for the last 9 years, and I'm here today, so I can continue to report good things about a lovely country. Our valuation is supported by a 2% dividend yield, which I think is the message there is it puts discipline into what we do. Dividends are really much part of our cost structure now. That's the way we think of it anyway. It's non-negotiable. And our balance sheet is an enabler. So in years like 2022, when we want to invest a lot of money in growth, because the growth projects are overwhelmingly positive, we can lean on our balance sheet a little bit. It's sort of like buying a house. You want to take the next step. You take out a mortgage and then you pay it back. And that's what we're doing this year. On to slide 4 and Q1 2022 results. So during the quarter, we produced 11,408 ounces at a blended grade of 1.9 grams per ton. what we said in January, what I categorically told everyone was Q1 would be very similar to Q4, which it basically is. This isn't a surprise. We guided this at the start of the year. And we've said also at the start of the year that quarterly production will be increasing in Q2 once we start mining from the Crown Pillar. Check that box. We did that, started that last week. And Q2 is improving from Q1. And then Q3 and Q4 will be better than that as the Crown Pillar is fully accessed and a big part of our mine plan this year. So everything's going according to what we expected. Now, the story with the Crown Pillar is that we accessed it about a month earlier than planned. So when we did our budgets back in September, October, we thought we'd be in the Crown Pillar in July. When we looked at our forecasts in January, we thought we'd get into the Crown Pillar in May. And when we actually got there, the team did a heck of a job. They accessed it February 22nd, I think it was, and then they finally started mining on April 19th once it was set up and safety was ready to go. So all good news and de-risking our overall plan for 22. Liquidity is good. We at the end of the quarter, we had $13 million of cash in liquidity. We had to borrow a little bit during the quarter, but guess what? We invested nearly $10 million into our assets for growth. So that's kind of what happens when you're growing. 2022 is an important year for Shanta. We're growing. We're probably going to use our balance sheet a little bit to ensure we have maximum flexibility, and then we'll pay it back, and we'll do so prudently. And as I've always said, my bias is to be as financially ungeared as possible, because I think things go wrong in mining, and we've seen all sorts of single asset producers, largely in Canada recently, get into all sorts of trouble with debt, and we don't want to be one of them. So that's where we're headed over the next couple of quarters. On to slide 5, a little bit about the actual physicals and what we were up to with the equipment. So from physicals from mining, this is the tons ore mined, and from processing, this is the second line, tons ore milled. We're right on track, right on plan with what we expected. You can see here they kind of jump around a little bit quarter on quarter, but roughly right where we wanted, which is good, which means the equipment is working and the plant is consuming tons. So that's good. Now, the next question is, where do the tons come from, and how does that fit with the plan? Well, the underground actual mined ore, so this is the ore we mined from underground, reconciled at about 3% better in terms of grade versus what we thought in the grade control model. And so that's obviously good. In terms of the underground mining equipment, that performed in line with expectations, and underground mined ounces were up during the quarter, resulting from better grade and slightly better grade and just more tons coming out of the underground. Open pit mining was a little bit of a disappointment. That was should have been about a fifth of our total planned ounces during the quarter, and the mining contractor had delays in spares and availability of equipment. I'll give you an example. They had spares coming from North America, from the US. They put in orders in July, and I think those spares arrived at the end of February. So supply chain issues all over the planet, really, and mining was not spared. So that led to a deficit of about 1,700 ounces during the quarter, and we expect to partially make up those ounces in future quarters. Now, finally, on this page, worth highlighting, we sold gold at $1,883 an ounce. This is the highest ever quarterly level reported by Shanta. So we're currently fully unhedged. On to slide 6 and the guidance for 22. As I mentioned, we aim to produce around about 12,000 ounces this quarter, or roughly what we did in Q4. So we did what was more or less in line with the estimate provided in January. As I explained at the start of the year, mining from the Crown Pillar was planned to start in May, and it started in April, so slightly ahead of schedule. which is excellent news in terms of de-risking our production plan. Just to recall that the Crown Pillar consists of 83,000 tons at 8.4 grams per ton for 22,500 ounces. And the way to think of that is it's roughly about, we'd mine roughly about 70,000 tons per month, or 75,000 tons into the plant per month. And if we did 83,000 tons, it's just over a month's of processing. But that's for 22,500 ounces, which is kind of 4 times better or 3 to 4 times better than a monthly production month. So it's all down to grade. Now we're obviously going to make sure that our plans show that will last over the balance of the year and into 2023, which de-risks the overall production plan and really gets us to the point where Singita is a cash generator as opposed to a cost center. As I said, we're confident in the 22 mine plan. We've grade controlled 82% of the underground areas. So we have very good visibility on what we're going to be mining. And as I said already, underground mining grades are reconciling slightly positive versus the grade control model. On to slide 7, a little bit on Singita. So you can see here the long photo with the crane, that was taken about 2 days ago. That's installation of the crushing circuit. So that's being put in place, and that'll be commissioned in, say, early to mid-June. So they'll turn it on. But overall, the project's now 51% complete. First gold production in Q1 next year, and things are on track at Singita. I won't go through all the detail. We put it in the RNS. A big part of that is also moving physicals. So mining continues at Singita. We now have stockpiled about 3,300 ounces, grading 1.7 grams per ton. And we'll probably get to about 10,000 ounces on the stockpile before we start going into production. And the reason for stockpiling ore is not because we want to invest in working capital. It's because we're building the TSF, the tailings storage facility, and we need waste. And when we mine waste, we typically find we're taking ore out at a similar time. On to slide 8. So our third asset. So the first one was New Luika in production, second Singita in construction, and then the third one is West Kenya in exploration. And so we had a couple announcements during the quarter. The first one being we added a new mining center, or a new regional center called Rumula. This is 35 kilometers west of Laranda, which increases total resources to 1.55 million ounces. And then we updated our total mineral resource estimate. As you can see here, we now have 378,000 ounces in indicated at Laranda, including 269,000 at Asulu, grading 14.6 grams per ton. So I mean, this stuff is very rich, and typically high grade usually points to low cost. So that's very encouraging. Now the target for 2022 is to convert another 700,000 ounces to indicated. We think that'll be about 400,000 ounces between Asulu and Bushi, and then another 300,000 ounces at Rumula to get us over up to about 1.1 million ounces of indicated resource, which is certainly positive, very positive for an asset we only paid $14 million for, especially at those grades. Now, if you look at slide 9, you can see a couple here things, and I'll give you some takeaways. The first one is this is focusing on Laranda. The first takeaway here is a very high grade system. These are total resources of 10.8 grams, indicated of 11.7. The second is that the indicated to inferred area shows that there's certainly room for conversion. The blue lines are the inferred, and the red areas are what's converted to indicated. And so in the balance of this year, we think we can convert another 400,000 ounces into indicated, and then we'll wrap up phase 3 drilling. We'll wrap up with phase 3 drilling in 2023, the first half, to get to a mine plan for the feasibility study. So that's positive. And then the third thing I want to note here is the fact that the feasibility study is starting next week, May 1st. And so we have our feasibility study manager recruited. He's moved over from North America. And, one of the first things we'll be looking at is how to tackle Bushingala and Isulu, whether to start with open pits, or do they go straight underground, where to put the plant. And all of these things will be part of that trade-off work that we'll do. So a lot to look forward to at West Kenya. And as you can imagine, it requires investment because it's a growth project, and we're committed to that. On to slide 10 on VAT, then 11 on some of the catalysts, and we'll move over to Q&A. On the VAT, now we're finally at, I think, the lowest point in a long time in terms of VAT outstanding. We're down to $25 million of VAT. And that is a function of VAT being current in country. So VAT paid is returned as refunds, which is great news. And things have normalized, which is really good. So that's now, I think it's 7 quarters of normalization on the VAT. So we're comfortable with that. Now, the second point I'd make is, we've said a little bit more this time on VAT, around the 23 million, is that we have really been having positive discussions with senior government members. And just recently we filed for the ability to have an out-of-court settlement. Doesn't mean we're going to have one, but it certainly means that it's now a possibility. So sort of like when you're about to buy a house, you get a mortgage pre-approved. We're headed in the right direction. Anyway, so we think it's positive, but I guess really the telltale sign will be if there is actually a resolution on this 23 million, what it looks like, when it comes, if it comes, and so we're working very hard on that to try and find a resolution. A few things to look forward to over the next 60 days. We'll have the West Kenya drilling results out probably in the next 2 to 3 weeks. We've switched lab providers. So we're now shipping a pulverized material to Canada, to one of the Capital Drilling Limited's labs called MSA Labs. They've been a bit slow on the first go, but I'm sure we'll get that smooth over the following shipments. And so that should come in the next 2 to 3 weeks. We then have the feasibility study work that's going to commence in May. Next week, we'll have our audited results out, aiming for Wednesday. And we'll have an update on the dividend, and then we'll set the AGM date. So that's to come. We'll have an update on the construction at Singida. So really, this will be around the progress on establishing the crusher and the mill when it arrives on site. It's currently on the ship, is what I'm told, and we're just going through the VAT deferment with that once it arrives, so we don't have to pay VAT on it or defer it over 10 years. And then once it's in port, we'll get it up to Singida and get it set up. We've already talked about this in the RNS this morning. We're looking at possibly leaning on our balance sheet a little bit to make sure we're keeping our growth well funded and not having to slow down anywhere. And really, just this is all about financial flexibility. So making sure that we have our growth plans, and we're not having to change these month by month. We want to hit our growth. We want to set our growth and hit it. And that means we want to get Singida in production as quickly as possible. and no later than Q1, and then keep West Kenya moving because it's such a great asset. And then finally, before the end of the quarter, I imagine we'll have another set of West Kenya drilling results up. There's currently 3 rigs drilling full time, and we'll have an update on what they're finding. So that's all to look forward to. With that, Zach, I'll hand over to you again to do some Q&A and just guide me on next steps.
Eric, that's perfect. Thank you very much for your presentation today. Ladies and gentlemen, please do continue to submit your questions using the Q&A tab situated in the top right-hand corner of your screen. But just while the company take a few moments to review those questions submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and a published Q&A, can be accessed via your investor dashboard. Eric, as you can see, we received a number of questions throughout today's presentation, and thank you to all investors for submitting their questions. Could I please ask that you read out the question and give a response where it is appropriate to do so, and I'll pick up from you at the end.
Okay, thanks very much, Zach. So our first question comes from Mark C. He asks, which costs are responsible for the increase in all-in sustaining? What is all-in sustaining forward guidance for each of the 3 remaining quarters? So the way to think of it is we guide for the year. We don't guide quarterly. We guide for the year $1,050 to $1,250 per ounce. And all-in sustaining cost per unit is typically driven, obviously, by your costs, and then by the amount of units you have. So in Q1, the number of units of gold production was will be the lowest in the year, and so naturally, the per unit cost will be the highest. What we look at also is in line with, obviously look at unit costs, but we also look at total costs, and total costs for us remained. There was some inflation that we noticed, but overall, this isn't per unit cost. Isn't about these. I think someone mentioned blowout. I'm not sure that's the right word, because it really is a unit calculation. And in the future, I might bring some detail on total costs, so dollar million, which might help make the point. So in terms of why did costs go up this quarter? Well, firstly, because number of units produced was the lowest of the year. We also saw an inflation in, I wouldn't call it inflation, but it's more of a spike in ammonium nitrate. And so we typically use, I think it's 500 tons per quarter, about 2,000 tons per year, and 40% of ammonium nitrate, this is now fertilizers, I think of it as fertilizers, comes from Russia. So there's been some obviously terrible news out of Ukraine, and there's been a complete destabilization of all sorts of commodities, including soft commodities and things like fertilizers and whatnot. And all we can hope is for better news to come out of Ukraine. But as a result, it's impacted us. And we've also seen the impact on the oil price as well. So we're a price taker on both of those commodity inputs, which have impacted us during the quarter. In terms of the next question here, for the last quarter, I asked a question about the spiraling cost of oil and what effect it would have on all-in sustaining costs. The reply was, although there would be an impact on the price of gold and would more than offset profitability. However, the latest results show the response was too optimistic, and there was an impact on cash and debt. Do we consider cost containment an urgent priority? Now, there's a couple things in that question. The first one is that the reason why we've ultimately had our debt go up and our cash is a little bit lower than where it was before is down to the fact that we're investing. So in Q1, we invested $9.5 million in growth. I think it was 4.8 at Singida, about 2 million at 1.7 at West Kenya, and about 2 million at New Luika. So again, it's the function of investing requires capital, and then there has to be capital into Singida before it can start to return cash flows back out. Now, in terms of costs, we we did exactly. We saw exactly what I said we would last 3 months ago. The oil price went up, and the gold price rocketed to $2,050 an ounce. And so that's kind of what we expected, which is good. I wouldn't call, as I just mentioned on the last question, cost containment. We do contain our costs. We're very actively monitoring it. But as you all know, there's some costs you just can't control, like commodity inputs. And I'm sure you must see this, if you open up the BBC, they call it the cost of living crisis. Inflation is everywhere. And I think it's very unfair to point the finger at Shanta or at the mining sector specifically. And you'll see it in all sorts of companies that are reporting. So hopefully that deals with that question. The next one comes from Barry. It says, does the West African project interfere with the wildlife migration of wildebeest and zebra populations? I think this might be the West Kenya project. The answer is no, it doesn't. We're not in the Masai Mara. We're in an area called Kakamega, which is kind of, I would say, semi-rural. So there's no natural migration of animals there. So there's zero impact. I don't actually know how far we are from the Masai Mara. It must be a few hundred kilometers at a minimum. Environment is so important to us because there's no second chance, and we have some great photos of our mine in Tanzania, near Luika. We've been mining there for 10 years. There's some great imagery that we post on our website about what it looks like. Michael R has asked, are you considering a fourth mill at New Luika? If so, what would the cost be? Really good question. And we were chatting about that yesterday here in Tanzania with the Exco. We've done quite a bit of work on the fourth mill. We've had an independent consultant look at the costs of that and kind of the risks, and we're comfortable with it. It'd be about just over $6 million. But again, that's more growth investment. The other way to look at it is to possibly upgrade the crusher at New Luika, which is about 1.7 million. And that's currently where the bottleneck sits at the processing plant. So that would add roughly about 200 tons per day if we upgraded the crusher, whereas a fourth mill would add, roughly 500 or 600 tons per day. So I'm starting to warm up to this midway hybrid solution of looking only at the crusher, but we certainly aren't at any stage ready to make a decision yet. Can you say, Ramon's asked, Peter's asked, can you say something about cost inflation for Singitas as partly the reason for the extra funding? Certainly not. I think we were fortunate enough to sign our long-term or long lead contracts on supplies for Singita. So the big ones are the crusher. We signed that in, I think that was January 2021. I think that's when we started that. The mill, we signed that sometime last year towards the end. And then the elution plant was, I think that was in January this year, may have been December. And yes, I mean, anything to do with steel, you're seeing cost inflation, absolutely. But we believe we've now, purchased anything to do with steel and in any material amounts of steel, and we'll be able to control the cost inflation on the capital. This whole thing about extra funding, our numbers show that we don't need debt funding. We can rely on cash flows to fund Singita and West Kenya and pay our dividend at a certain gold price. When we're investing this much capital, it's prudent to make sure that you have flexibility. I mean, debt funding doesn't happen overnight. It takes a long time. Lenders are notoriously slow. And it's better to have plan B or plan C ready to go than not. Because the idea of having 250 people at Singita, not doing anything for a month because we're waiting for a production shipment from New Luika is not very efficient. And so, when we think about our own funding needs, this is really about managing flexibility and making sure that we're in the game and we're able to fund our growth needs. absolutely will never go over lever like we've seen other gold producers do, because it more often than not ends in tears. Ramon's asked, great news about the crown pillar. How long will the company be mining that high grade for? The way to think of it is it's part of the blend, and that blend should continue into 2023, probably Q1 2023. And we're using a supplement to blend between the crown pillar, the underground sources, the open pit sources, and the run-of-mine stockpiles. And so when you put it all together, you can then, it's sort of like it's arithmetic. You put together what blended grade you want, back solving for the amount of gold production you're targeting, and there you go. So it's all about flexibility and using it sparingly. Don't want to overuse the crown pillar. Have you looked at, Peter's asked, have you looked at solar power to provide some of the energy requirements of the mines? We certainly have, and we certainly do. We are just in the process of acquiring the solar plant at New Luica from the incumbent. They've been running it for, I think, 4 years. And it just makes absolutely perfect financial sense for us to acquire it. It's over a very, very favorable period. I think it's about $100,000 a year over 5 years, which is exactly what we would pay to rent it anyway. So it's a win-win for both sides, and it provides us 2 or 3% of our power needs at New Luica. Solar power is a tricky one because unless you have a battery, you're sort of reliant on the clouds and making sure it's not a cloudy or rainy day. And in Tanzania, you get 2 rainy seasons a year. So you at those periods, you just don't have any solar power. So anyway, it's a good top up. It's certainly a green credential, and it's something we like. It's cheap, and it's good for the environment. Mark, that's it. I don't see any other questions. And Zach, so I'm sorry, it's Zach. I don't see any other questions. So I'll hand it back to you to wrap up the call.
Eric, thank you. I think you've addressed all those questions you can from investors today. And of course, the company will review all questions submitted today and publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, can I please ask for a few closing comments?
Yeah, terrific. The closing comment here really is around 2022 objectives. The first one is production guidance, meeting 68 to 76,000 ounces. I'm a lot more confident in that today than I am 3 months ago because we're now mining from the crown pillar. Number 2, the second priority in 2022 is hitting our growth targets, building Singida, progressing West Kenya, and extending the mine life at New Luica. Those things will consume capital, and we have our plans in place to make sure that A, we can fund that from cash flow, and B, we have the rainy day fund, so to speak, the balance sheet to use if, as, and when is required. And that's exactly what we're doing. It's all about risk mitigation to make sure we hit our priorities. So Shanta's in great shape. We're happy with where we are today. The outlook is bright, and I thank all of our shareholders. It looks like most of you on the call today are shareholders for your continued support.
Eric, thank you for updating investors today. Can I please ask investors not to close this session, as you now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. It's going to take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team at SHANTA Gold Limited, we'd like to thank you for attending today's presentation, and good morning to you all.